Morning, everyone. Morning. How you all doing? Hope everyone is doing well. We got a few things to talk about today, as we had a stark rally from yesterday's pricing. Uh, CPI inflation or not, right? We got the pre-market little head fake to the rally. Same thing transpired yesterday off the open, and we just got a constant bid throughout the majority of the day. Now we're just kind of rotating very close to these all-time highs. And today, we're not so far off, could easily go tag that and see how we expand. Now, I'm not very. I was looking for some of that downside realistically to begin this week, especially how we closed on Friday. They had the chances, but constant failure for that bear to actually gain some traction results in stopping the shorts and continuing higher. You got to understand where these guys want to flip and be in line with those, right, from a structural and from an auction perspective. Otherwise, you're just going to end up selling these rallies as this thing continues going higher. So let's take a look at some of this news that's going on, and we'll talk about the plan for the day and seeing how it sets up, right? Yesterday, we ended up solidly higher after the latest consumer inflation report did little to alter the market expectations of interest rate cuts. Remember, the cut is expected to come out in June, right? The first cut. We have a meeting next week that's going to be fairly important as well, as we'll see how the dot plot changes up. It's the first meeting of the, well, not the first meeting of the quarter, but to wrap up the quarter, I should say. So the consumer price index advanced 0.4% month over month in February as expected, and slightly accelerated in January's 0.3% rise. And core CPI, which excludes food and energy, rose 0.4% month over month, a tad higher than the anticipated plus 0.3% figure. And we see that the Fed needs to shelve considerations of rate cuts as the risk for reaccelerating inflation is very much on the table. While, right, investors and traders alike, including Citadel's Ken Griffin, also warned of price remaining elevated in the future, saying that the Fed shouldn't cut too quickly. Like we've said before, I tend to agree with that statement that we don't want to over exaggerate the speed at which these cuts happen, because it can be a little more detrimental for the path of this market. Now, one of the main piece of information news, right? TikTok bans. This has been in the news for quite some time now, over the last week or so. And efforts to outlaw TikTok in the U.S. are coming strong and fast, and the House of Representatives will vote on a bipartisan bill today that would force Chinese parent firm ByteDance to sell its stake in TikTok's U.S. operations or face a nationwide app store ban on the short form video platform. So note that all American social media networks are blocked in China under national and security policies that are collectively dubbed the Great Firewall. And some of the fears in the recent years, national security risks surrounding data and software have also sparked concerns in the U.S., especially if information can be shared with the Chinese government. And there are additional worries that China's ByteDance can use the TikTok algorithm to track and influence users with selective content promoted by Beijing. And it doesn't help that many parents and mental health professionals have warned against the addictive and destructive nature of the platform. It's a big deal, as TikTok is one of the most popular apps in the US, with the audience of around 150 million users across the country. A ban won't come very easy, right? Remember, former President Donald Trump already sought to outlaw TikTok or force a sale to its US business to an American company. And while the transaction with Oracle almost went through in 2020, if you guys remember that, the lawsuits did pile up. And an injunction was granted to prevent the app from being prohibited. So the Biden administration later revoked the planned ban, ordering that national security review in its place. But Chinese tensions and data privacy concerns eventually swept both sides and of the aisle and led to a notable House hearing in March. Since then, Montana's statewide ban on TikTok has been blocked by a federal judge who said the measures violate the Constitution in more than one way and overstep state power. And while the new TikTok legislation is expected to pass the U.S. House, it faced an uphill climb in the Senate, though President Biden has stated that he would sign the ban should it reach his desk. Despite this outlook, Biden's re-election campaign is using the platform to reach younger voters following a notable debut on the Super Bowl Sunday. Meanwhile, Trump has reversed his support for the ban, saying that it would make young kids go crazy and empower Facebook or Meta, which he considers to be the enemy of the people. So we'll see how that shapes up. TikTok is set to fight the legal finish, but should it be forced into Divestor Rumble has expressed interest, and rivals like YouTube Shorts, which is owned by Google, and Instagram Reels by Meta, might also be watching the latest developments. So, in other news, dividend payments to shareholders worldwide have reached a record $1.66 trillion last year, up 5.6% year over year, according to the new report by asset manager Janus Henderson. Pessimism over the global economy proved ill-founded in 2023, and although the outlook is uncertain, dividends are well supported, said Ben Lofthouse, head of the Global Equity Income. Now, banks took the lead in shareholder payouts as their profits grew amid higher interest rates, although its positive impact was almost entirely offset by cuts in the mining sector. Banking giants, including heavyweights like JP Morgan and Wells Fargo, raised their dividends last year after clearing the Fed's annual stress test. So there have been, like, realistically, as stock prices increase and we've seen a broader market rally, even if dividends do stay, if the payouts stay the same, right, percentage-wise, there's generally an increase with those increased prices. Now, even if the payouts are increasing, it's a double increase, realistically, and it's been a massive, massive upward cycle in this, and we've seen that this market has continued to rally. What I'm seeing right now, if we take a look at the S&P for today, the NASDAQ for today, right, different assets, realistically, I'm also looking very closely at NVIDIA these past few days, because NVIDIA is it's a big constituent at this point, and the volatility and the upward movement is putting a lot of decent upside pressure at this market. As you can see, NVIDIA just pulls back to every chance it gets. Now, with the equity market here, with the S&P 500, yesterday we failed to accept yet again into a distribution lower, putting upside pressure in this market, right? Making some bullish headwinds. Realistically, right? We have a very, very small window for these sellers to come through, and we're at this massive area of heavy volume at the tops, which are considered to be some kind of resistance for the sellers to try and push this thing lower realistically. As I see this, this is the final area for the shorts. Otherwise, as long as we can maintain above that 52, 24, 25, 26 area, these buyers are going to step in. Above the 10, above the 08, they're going to step in. You got two levels to see these buyers step in. Otherwise, right, we can start looking for that descend back lower with it, which will accept distributions. That's mainly what I'm looking for. I think it's going to be very difficult to be opposing this upside rally right now, but if you start running through areas lower, where this heavy volume sits out, you're going to expect movement to the downside. So that's what I got for today, a shorter update. I will leave you with that, and I'll be gone for the rest of the week. I'm flying out to Spain today, and we'll be back on Monday in our YouTube updates. So that means this Friday we won't be streaming our room. We'll be back to it next week in full force. So that's going to be very fun. But as I see some of these comments, my 1,000 echoing VIX, that is not good. Shit, I apologize for that. And these are things I'm going to have to figure out realistically. What if I do something like this, right? If there's only one microphone input, how is that since I started talking? Is this better from the echoing perspective before I run away? While you guys are responding or looking at this, you guys can check us out, tradeproacademy.com. You can check out our open Discord at community.tradeproacademy.com as we get ready for next week. Next week is going to be the Fed meeting minutes, right? It's going to be a Fed rate decision, so let's see how that's going. All right, fixed. All right, thanks. I appreciate that. Silly settings here. All right, so thank you, everyone. Enjoy. Have a great midweek and rest of the week, and I'll catch you guys on YouTube next week. Thank you and take care.